The dividend yield on the S&P 500 is the lowest in over 20 years. With the recent highs, the yield on the S&P 500 has dropped to around 1.27%. Again, that's the dividend yield, and it is very close to its lowest level since February 2001 when it hit 1.2%. If you remember, at that point in time, it was during the dot-com bust and the index fell dramatically for the rest of 2001 and 2002 as well. The highest yield on the S&P 500 in recent times was in 2009 when it was 4.1%. That was a very strong yield. Obviously, investments did well during that time period. Now, what has caused this low current yield? It is because the index is now heavily weighted in tech stocks, which have very low yields. This includes Nvidia at 0.03%, Apple at 0.44%, Microsoft at 0.8%, and others that have very low yields or no yield at all. Most of the dividend yield comes from other industries like financials, which currently has a weight that is less than half the technology companies. The current weighting for tech stocks in the S&P 500 is 32% compared to financials, which is the second largest group at 14%. This then means that although these companies have strong yields, since they have a smaller weight, their dividends have less of an impact on the entire index. Going back in history, almost 100 years, dividends have accounted for 32% of the total return of the S&P 500. Also, if you're an income investor, gotta say the S&P 500 is definitely not the place for your money with such a low yield. This low yield on dividends also highlights another concern that perhaps the S&P 500 is too high and could struggle going forward. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.